Hello everyone on YouTube. Thank you so much for joining the Stock Martin channel. If you're new to the channel, welcome. If you're back, welcome back. I have a nice video for you today. We are going to be talking about the global market because we have been quite down in the US stock market today. So we are going to be talking about what the reasons behind this are. I think you're going to find this video very interesting and informative. Before we get down into it, please, if you can, give me that thumbs up, the like button. It'll be shared with the YouTube community and it'll help with the algorithm. Also, if you're new to the channel, please hit that subscribe button, notification bell, hit all so you can get all my videos. And I really appreciate all you subscribing. We are now at 4,000 subscribers, so I really appreciate that. But let's jump down into this and we're going to talk about what's going on in the global market right now. First, we will start with the United States. The S&P is down by 1.7% as of today. At one point, it was down over 2%, which is huge. And it's the lowest stock price that we've had in the past 2 months. The Dow is also down 1.78%. NASDAQ, as you can see, is down over 2.2%. And the Russell 2000 is down also 2.44%. As you can see, the articles out there are saying that the Dow sheds 614 points, or about 1.8%, the worst day since July. And so I did want to talk about this because I think it's very important for us investors to see what's going on and why this is going. So normally, historically, September, October, the two worst months in a year with stock market and stock market trading. So we are definitely in that month right now where the stock market is down, which is September. So will this keep going on? Well, we'll definitely talk about this, but let me talk to you and share this with you. So this is the volatility index. It's called the VIX, V-I-X. You can actually go and look at it. I'm using Yahoo Finance right now. The higher the number, the higher the percentage of the index, the bigger the chance are having a volatility. So this does monitor volatility for us. Just in one day, just today alone, this went up by 23.5%, which is a huge amount of fear, a huge amount of volatility in the stock market. At one point, we went up all the way up to almost reaching that $30 mark. So this is just telling us that the index is very, very volatile, that it's a volatile market. Now, what I did want to show you is going back 6 months, we had a few spikes up, but the last one was back on, if you look on May 12th. If you look back historically at the stocks out there, a lot of especially the tech stocks, EV stocks, if you're any of these stocks out there, you're seeing a very big red day today because there is a lot of volatility. Now, I did want to transition to see why the stock market is going down, and it's pretty much because of this company from China called Evergrande. So Evergrande is a big, large company in China that develops and manufactures buildings. It's in real estate, but we'll definitely talk about this. But according to this article, Evergrande isn't the only reason the stock market is heading for its worst day in 2 months. And we are going to be talking about 7 other reasons. Before we get into these reasons, I did want to just play a short clip of Evergrande and why this stock is going down. And it's also bringing down a lot of the Chinese market.
It's the Chinese giant that lives up to its name. Evergrande is one of the biggest real estate groups in China. Owner of a football team, it's also built a football academy thought to be the biggest of its kind. It's also building the world's biggest football stadium, a massive lotus flower that will seat 100,000. And its latest claim to fame? The Hong Kong-listed Evergrande has become China's most indebted developer, with liabilities worth more than $300 billion. And the cash-strapped property firm is struggling to pay it back, sending its stock price plummeting, prompting ratings agencies to downgrade its status and warning it could default, which would send shockwaves through China's economy. So how did Evergrande get into this mess?
It's built as many as 600,000 homes annually and is a massive debt load 56 times bigger now than it was a decade ago. It's also strayed far from its core business. It's founded a colossal football academy, a bottled water brand, which it then later sold, an electric car company.
Disgruntled and desperate investors have protested at company headquarters in Shenzhen. They've cheated me out of all my money. I've nothing left, says one unidentified investor. The real estate giant said online speculation about its bankruptcy are, quote, completely untrue, adding, the company has indeed encountered unprecedented difficulties at present, but the company is determined to do everything possible to restore the operation as usual and protect the legitimate rights and interests of customers. In August, China's central bank summoned Evergrande execs and warned the company to reduce its debt. Analysts say it's likely Beijing would intervene. Will the Chinese government step in to save it?
Here at the EIU, we do ultimately expect that the government will intervene in Evergrande's case, as it will not allow the company's defaults to spread into the banking system.
The problem is if large numbers of those buyers of properties don't receive their properties, then that's going to cause contagion into other property developers. People are going to lose confidence.
There's just too much at stake. China's economy is sputtering because of its aggressive response to the Delta variant and supply chain issues. Chinese markets have plunged as regulators target tech, education, and other private enterprises. A major default is the last thing China needs. So Evergrande, living up to its name, has become too big to fail.
So now that you watched this video, you kind of have an idea of what Evergrande is. It is a Chinese property giant that is in a lot of debt. So they are in over $300 billion in debt, and this is rippling through all the global markets out there. So according to this article, the US stock benchmarks were on track to post their worst daily drops in more than 2 months, and it is getting blamed by this potential collapse of Evergrande. So if you remember back in 2008 when we did have the Fannie Mae, Freddie Mac, when we did have the big crash in the housing market, this is very equivalent or very similar to what China is having right now. Now, it is expected that the Chinese government is going to bail them out, but this is definitely bad news for all the stocks out there because it does create a lot of fear, uncertainty, and doubt in the stock market. Now, this article points out another very important point, that the downturn in this highly leveraged real estate sector in China, which according to the Financial Times, makes up more than 28% of the Chinese economy. So this is a big problem for the markets in China, and it's also taking down and feeling the ripple effects throughout the global markets. But there are other factors out there that are bringing the stocks down all over the world. The first one is the Delta variant. So as you know, the Delta variants right now are on the high. We are starting to get also some new variants out there, the new variants for the COVID, because you are having a lot of people affected. So the US now is averaging more than 2,000 deaths daily. That is according to the New York Times tracker. This is the most since March 1st. And it's mostly right now impacting the unvaccinated. So a second thing that we are worrying about, and the thing that's bringing the stock market down, is that the Fed is tapering its talks. So right now, the markets are very fixated on the Federal Open Market Committee. They will be meeting tomorrow in the next 2 days on September 21st and the 22nd. And they are going to be talking about how the economy is going to be rebounding and how it looks with the COVID-19 pandemic. And since the pandemic has still been around and we are getting these spikes up, there are still a lot of talks in what the Fed will be doing. So currently the Fed is purchasing about $80 million in treasuries, $40 billion in mortgage-backed securities each month. They have been doing this since last June, and they are doing this to keep the long-term interest rates low and bolster demand. So we'll see if they are going to be kind of winding that down because they're going to be talking about that in the next 2 days. Because if they do, the interest rates can start going up. So that's another big thing to look into. So in addition to this, we are having more economic challenges. We are having the debt ceiling is going higher and higher and higher. So right now they do have the U.S. Secretary Janet Yellen is in talks right now. They are having a lot of meetings to see if they do need to suspend or raise the debt limit. And so according to this article, the Congress has raised or suspended the debt limit about 80 times since the year 1960. And they are asking Congress right now to raise or suspend the nation's debt limit right now to prevent any widespread economic catastrophes. However, it looks like the Senate Minority Leader Mitch McConnell indicates repeatedly that he and fellow Republicans are not inclined to do the same. So during the Trump administration, the Democratic Congress did agree 3 times to suspend the debt ceiling, and this did definitely help out the economy. However, now that the Senate minority leader of the Republicans is refusing or saying that he's not going to do this, so it looks like that the country's debt is continually getting higher and higher. So it is right now at $28 trillion. And it looks like that if we do not raise it or we do not suspend it, there could be, according to Janet Yellen, the U.S. Treasury Secretary, there could be widespread economic catastrophe if this is not enacted. So again, I did mention at the beginning of the video that September, and normally around this time in the season, we do have a lot of pressure on stock markets. And the stock market has normally done not so well in the month of September and October. And so this is kind of a bad time for stocks as well. And we are seeing it around this time as well. So a correction is also due. According to strategists, they think that we have had a very big bull run and we do need a correction, which is good for the economy and good for the stock market, because it looks like we have gone up and revved up a lot of the overvaluation companies out there. So we definitely need that drawback and that cool down in the stock market. And it looks like we are due for it. So that is another thing. And the last thing I did want to talk about is inflation. We are still seeing that inflation concerns are out there. The cost of living, everything from food, transportation, vehicles, everything is costing more. And this is because of the COVID variant. It's also due to the supply chain issues. I mean, we have so many things going on right now that it is causing inflation and inflation concerns. Anything and anytime that happens, it negatively impacts the stock market. We'll definitely have to keep this on the lookout and keep watching out for this. But I do think that things will get better once September rolls around, and looking forward, I think the stock market will rebound quite nicely. And over the past several decades, the stock market always does rebound and go back up. We are just right now in a big testing phase, especially because we have a worldwide economy system that is feeling the ripple waves of the Chinese market and this big Chinese problem. So I do think that the Chinese stocks are getting hit a lot right now. If you can see going to NIO, I mean, NIO's down, I believe, around $34 last time I checked. But a lot of these stocks are going down. So if you do have a little bit of cash, I would say maybe just make sure to hold it. But if you want to nibble a little bit to get the dips, I think that's definitely wise to do. But definitely, try to have a lot of dry powder, have a lot of free cash on hand if you can, because cash is king whenever we have a market correction and a stock market crash. So will we have a crash? I really don't think so. I think that the Chinese government will, help this Evergrande company, but we are definitely walking that tightrope. So we'll definitely have to keep you updated and keep you posted in the stock market. But I hope you like this video if it helped you understand what's going on in the stock market right now. Or if you have any questions, please leave them down below. If you please can give me a thumbs up, the like button to share this video with others. Also, if you're new to the channel, hit subscribe, notification bell, hit all so you can get all my videos. And don't forget to share this video and my channel with others. Share it with your family, your friends, your coworkers, that next door neighbor. I'd greatly appreciate it. And I can't wait to talk to you on the next one. Thank you. Down below, if you would like to help out the channel, I put 2 links. One's for Webull. If you open an account, deposit $100, you get 2 free stocks valued up to $1,850. If you deposit $100 into Coinbase, you get $10 of cryptocurrency and trading. Thank you for supporting the channel.